The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, looking at Thursday's trade action, mixed in the grains and oil seeds, a good bounce back in cattle futures. The rest of the market's relatively quiet. It's been a volatile week. We got plenty to talk about. Let's take a look at things. Joining us now, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to catch up with you again this week. And we were commenting a little bit before we jumped on live here that when you have a holiday week, sometimes they could seem longer when you get a day off in the trade. And this week has really kind of felt that way to me, Brian.
Well, in particular, this Memorial Day, because you never know what's going to come at you with weather for the crops, right? So some years we have some really high volatility. This year was kind of a dud. We had a good forecast, in essence, going into the Memorial Day weekend. And I don't want to make it sound good everywhere. It's certainly too wet in some spots, and guys have really struggled, and farmers are really challenged in areas, and it's been cool out west. But we didn't see like a big flip and 100-degree forecast for the first week of June and no rain, anything like that. In fact, corn futures have been down 5 consecutive sessions now. So it is and you've heard me use this term before, the corn market's had a miss. Rallied nicely into last week, middle of last week, and then now 5 days down in a row, and trying to pencil in some weather concerns. But it just seems like the managed money, they stay short, according to the commitment of traders, Jesse, and farmers are really pushing the envelope to get things planted. So not ideal for many, but crop progress numbers are out, still a little bit ahead of schedule, and that seems to be enough to keep the managed money on the short side right now. Admittedly, we're hearing some things out of Brazil that look like that crop could be pegged a little bit higher again.
That's something we're going to have to be tracking, as I know they've started the early safrita corn harvest down there. I wonder about this, Brian. We've touched on the seasonality topic and more, but when you look at the calendar, of course, we're closing out the month of May. So one has to wonder if this grain trade, a little choppy here to end the week, maybe some positioning, some of that end of the month type of trade. I mean, could we be setting ourselves up for some of that seasonal rally as we flip the calendar to June potentially?
You sure could, but I think the market has to have a catalyst of some type. Now, look what happened today. We still finished lower in July corn, and yet we had a couple of announced sales that were over 100,000 metric tons. So that's somebody's continuing to buy, right? And we know it's not. Well, I don't know who the other 100,000 was. One was, I believe, Mexico. The other one was unknown destinations. But we don't think China's buying U.S. corn. But we need something to get the market turned around. The fun money on Friday's commitment of traders report last week, that remember that quantifies it through Tuesday. If you look at that report and compare it to last year and the year before, identical. They're in the same window with about this many contracts sold. And 2023, the corn future started to move higher on drier weather forecasts and rally kind of sharply into mid to late June. And last year it just continued its general slide. So the market needs something. It has a miss going right now, which is a real disappointment. Beans are consolidating, but they're not rallying with any vengeance. And then the wheat market is trying to get a foothold here. But the grains as a whole, boy, pretty difficult, pretty challenged. Now, without rambling too much, the bulls are going to argue, look, this is a kind of a big victory, right? You've got this corn market that seemingly can't find much friendly news other than USDA reports, which that should be enough, but it's holding in there. Bears will say, well, look, you're just avoiding the inevitable at this point. Their prices are going to push lower, and the U.S. crop's going to come around. Boy, I'd be careful there. We got a full growing season ahead of us, and a lot of this corn is in a little late. We figured about 8.4 million acres in key states yet to be planted as of Sunday. So even though ahead of schedule, it's still a chunk of corn that's a little bit late.
Could wheat be that something that potentially helps out corn and soybeans. And I know that's a pretty tough proposal maybe to ask. Some might say wheat market likes to do wheat things, but I know that spring wheat ratings were not very good. That first condition rating we got earlier in the week, and so I mean, I look at this wheat complex you mentioned trying to get a foothold. Could that be the something that lifts, rising tide lifts all boats in the grain trade, Brian?
Yeah, it's kind of funny in the commodity world. It just seems to often prices are reflective of sort of the view or the mood, right? So if you looked at wheat this week, if you looked at what have you got, well, geez, crop ratings weren't quite as high as anticipated, and spring wheat, as you mentioned, and some flooding last week delaying winter wheat planting for Argentina and some issues there. But then you get a dribble of news that India's crop could be 2 million metric tons larger. So it's kind of countering. You hear things like, well, the war, trying to get to a peace agreement, and yet Russia attacking, again, some agricultural things. But wheat certainly could. The world still has a tight enough supply of exportable wheat. But there again, you need, in a marketplace, you generally need more than one or two things. You need one, two, three, four things that kind of hit. Usually the big one would be weather on top of some other things like good export sales or, um, late planting or something.
So as I look at this grain complex here, just as a whole, risk management wise, some farmers are trying to race to get done here with the weather challenges they've had. Some are already done. We're rolling the calendar to June. Anything on your mind that producers need to think about from a risk management standpoint, Brian?
Well, two things. Let's go three things from a risk management perspective. If I'm a feed buyer, you need to recognize that a lot of this crop got in the ground fairly quickly and it's been cool and it doesn't have the growth behind it. So you're not in, depending on how June goes, you're looking at a crop that could all of a sudden be kind of really in trouble, that it's late. Now it's going to get heat or dry, or could get heat or dry. Looking at the longer range forecast from NOAA, you see that you've got, again, the Western Corn Belt below normal in precipitation, above normal temperatures. So from a feed buyer perspective, I'd certainly be looking at ways to defend the higher prices. From a producer's perspective, if you've been patient, gosh, God bless you, because it's really testing your patience. But probably continue to be patient. See if we can't get some move in June. But if you are at a point where you just don't know where to get started, how to get started, might be a little aggressive. But you buy a put in December corn, a 440 put, and maybe sell a couple of $5 calls. Now that's a beast that has a lot of margin attached to it and things. But if you don't have any corn priced, it is something that should be looked at. Maybe just selling a call, or maybe not buying a call at all, just having to put as a safety valve, and you can go short date on those as well. But here we are. We're at the end of May. Now, there is some historical relevance that prices typically get some bounce in June or July and some hot weather. So patience may yet pay, but it's pretty challenged. So we talked about the feed buyer, we're talking about the producer, and we're talking about different strategy. The other thing for the producer would be, get a little bit more aggressive with setting your targets above the market and putting those orders in place, because the crop, we assume, and you got to be careful with assume, but it's going to finish out planting. And so rallies that occur from here, we know one hurdle is going to be behind the market here within days, and that's the planting progress. The question is, if some of those wet acres, the patience might be rewarded by some of these areas that just can't get in. Maybe prevent plant date is 2 days away in some states.
We're having a conversation today with Brian Doherty, Senior Market Advisor with Total Farm Marketing. Let's go over to the livestock trade, and I'd love your perspective on cattle this week. I know we had a real volatile start to the week with those unfounded screwworm rumors that really kind of hit the trade Tuesday. Here we are Thursday, getting a nice rally back in futures, but it feels like this market is getting a little bit top heavy and sensitive to news headlines, possibly. I mean, your perspective on this week's cattle trade, Brian.
The perspective that I have is one of conflict. It's mixed. On the one hand, you've got this very, very, very ominous bearish key reversal at the top of the market on most, maybe all the futures contracts. As an example, on May 14th, they peaked, and something like August, I'll use that contract. That's probably June or August, but June's 215, August 210. But anyway, August 214.50 that day had a low of 208.47 and a close at 209.37. That's called a bearish key reversal. The market went down another day, and then it consolidated. It's rallied up, and then we were down here early in the week. But we have not exceeded that bearish key reversal high. So I'm watching that really closely to see if the market will be able to get through that. Now, cash continues to hold firm. Cutout values, impressive. It seems like weekend disappearance from Memorial Day was probably as good, maybe better than expected. But still, to your point, the market, it bounced back, but it hasn't bounced back to where it was. And the longer we don't kind of see this thing move, the more worried I am that your retail push, your retail demand for Memorial Day, grilling, Father's Day, all of that is starting to become old news and behind the market.
And that's a good point. And that's, another piece that we've talked about so many times. I feel like I'm a broken record when I bring it up week in and week out with folks on this show that I keep wondering, when is the demand wall, I'll call it, maybe I haven't used that term yet. When is the demand wall for beef, for other proteins? When are we going to run into that brick wall and things are going to slow down and start to reverse out? I think that's the $1 million question, Brian.
Well, it is. And the cutout values, if we use that as a guide, up $3.57 yesterday in choice cuts, 365.42. Up this morning, $1.25, 366.67. Selects 119 higher this morning, 352.93. These stratosphere prices, right? And yet the board hasn't been able to pick up. So I always look at the board as sort of the collective vote, right? So far, the collective vote isn't confident that these cutout values are going to hold, but boy, we're almost into June now. So within 30 days, you're either going to see this capitulation in the cash market or June move up, or a combination of both. And June 215, where do we finish today? 215.52. That's still pretty impressive. And it's eking higher. The contract high, to put that in perspective, though, is 218.62. So still $3 off of that. That contract high, it's getting away from us. That was already 2 weeks ago on May 14th.
How about that hog complex? We've been kind of hovering around this 100, 102, 103 mark here. Kind of a quietly lower day Thursday. What are you tracking on the hog side of the ledger, Brian?
Well, keep looking, of course, at the CME lean hog index price. That's 93.52, and that was 47 higher. But with beef prices where they're at, you've got to think that the hog market is going to see continuous good demand. We're seeing really good consolidation on the charts, and I'd like to believe that something like June hogs trading at right at 100.025. So you can't get any closer except one tick away from 100. Really good opportunities to, if you've got hogs to go in June, buy some puts under there. All right, I'm going to back off. You don't have enough time with puts there on that 14 days, but you could hedge that contract, or I guess buy puts if you only wanted a couple weeks. But the July contract posting near 103, just, taking its cue from higher beef prices, taking its cue from expectations that midsummers typically are higher prices, good consolidation on the chart. We're still not back to those contract highs from mid-February, but gosh, well off of that low, just under $88 or $14, more than $14 now off the low that we saw the market spiked out. Now, that was a scary point because the market really blew out relatively hard, and I don't recall that there was any really one or two fundamental factors. It just blew out. So I think from a marketing perspective, my encouragement would be continue to talk to your advisor, look at ways to put some flooring mechanism in, or forward sell those hogs and look at some kind of re-ownership if you think the market has some retained ownership possibilities for higher prices to be captured. But I think it's a well supported market at this point. We have no reason to think not.
How about the dairy trade, Brian? As we get close to wrapping things up today, what are you tracking there this week?
Just the movement in how futures are working. So we pushed in a new contract highs, and we saw the market touch over $20, and then quickly kind of give that up. So 19.99 was the high in the June contract, and then the July contract got a bit of a push here as well. And that here 2 days ago put a contract high at 2028, also 1959. So it doesn't take long for it to give some back, and that's where we currently are, 1959 with today's low 1946. Good cheese demand, good improvement in butter prices. Cold storage had a slightly friendly tone to it. That's being countered by some increases, not dramatic, but increases in last month's production. The revision from this month's production report revises last month's as well, and then a little bit heavier supply this month. So we've got production numbers. What you have to be impressed with is the way that the cheese market has moved, and you got to kind of think, if you use common sense, that if beef is where it's at, pork a little bit higher, gosh, there's no reason not to expect that we're going to see good demand continue into the product market for dairy. The question is whether or not that good demand can really parlay itself into something much higher in price. I just don't see that happening without, a shock to the market, like a real rally in the corn price or something that would tell us that producers are going to back away from production. Right now, they're getting too much for beef calves, and milk prices have improved. So there's no reason not to expect production to hold or grow.
Brian, any final thoughts you have for folks or anything you want to reiterate this week?
We're entering that time of the year, Jesse, where volatility can really kick in. We have seen it in the livestock market now for some time. The grains are kind of the opposite. We're kind of limping along, trying to get something to push that market there. If volatility comes, it's likely to come kind of quick. So I'll reiterate that as you move into the latter part of May, corn prices certainly, bean prices certainly, wheat prices certainly can go lower, but we're entering that time of the year where things could quickly change just on a view of weather or rainfall patterns. And so again, think strategy. End users think strategy. If I'm a producer and I say, I'd like to sell corn, if December can get back to 475, I want to sell some corn. Well, when it gets there, you're really going to sell the corn. So make sure that you think about buying your out of the money call options now. So when it hits 475, you don't think, you just do, and allow those sales to take place. So really concentrate on the strategy is my point.
Brian, if folks want to have a conversation with you there at Total Farm Marketing, I know a few ways to get in touch with you. How can they get a hold of you?
I would ask first for a phone call, 800-334-9779. There's a couple of Brians. If you want to talk to me, I'm Brian with a Y. And then if not, you want to send me an email, brian@totalfarmmarketing.com, or check out our website. Got a lot of good resources there.
Brian Doherty with Total Farm Marketing. Always good to hear from you. Have an awesome weekend. We'll talk to you next week, Brian.
All right. Well, much appreciated. I want to thank you for your time.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.